All right, why don't we get started again? Okay, so refreshed from our break, we're ready to tackle our second topic here, where we want to investigate the drivers of professional behavior in the gray area. And so really think about the issues related to, say, high profitability, a market-oriented frame for tax professionals. Think about the nature of big law, the big accounting firms, conflicts of interest, and so kind of bring that into a bit of our conversation. So to start us off, I wanted to just sort of generally put out the basic kind of business question. How do high-level fees and profitability in the tax profession contribute to a business model which ultimately may lead, to potential tax abuse in the gray areas? We've heard already reference a bit to some of the pressures that one might feel, and presumably coming a bit from a place of profit, but more generally, observations about the fees, the profitability, and that business model really creating our our current situation. So Robert, and then Ted.
Well, this is actually pretty straightforward. All accountants and law firms are commercial enterprises. And if you work for one of those firms, whether with a partner or lower, they look at chargeable hours and how much money you bring in. If you want to make partner, you better bring in new clients and a lot of money. That's the pressure. You get well paid, but there is no other way to do it. And of course, that leads to any creative way you can do to make it. And if you, the thing is, you make partner or you're out, right? That is changes a little bit with the big four because they don't have enough space for all the partners. So now you have assistant directors, directors, senior directors, executive directors, managing directors before you make partner. But still, you only make that if you have the turnover. So I think it's all because it's money. That's what it is.
Thank you. Ted.
Yeah, I want to put on the table at least some perceptions that I have about the difference between the accounting profession and the legal profession. It's my sense that when one of the big four, for example, does something, it's the firm that does it. Now, obviously, firms operate through individuals, but it's not necessarily that such and such a partner or some other partner did it. It's that the firm does it. By contrast, in even the biggest law firms, the focus is on the individual partner. And this is true in terms of reputation building, and it's also true in terms of discipline. So, for example, when Arthur Andersen went down because it had promoted abusive tax schemes. It was the firm itself, and it had commoditized them. Now, law firms have a much harder time commoditizing anything, and they have a hard time doing anything as a firm because there's so much competition for billable hours within the firm. So that when something goes wrong, it's almost always the case that the discipline is taken against the individual, not against the firm as a whole. This then affects the way regulatory agencies can discipline and the way that lawyers and accountants then worry about that discipline. So once Arthur Andersen had gone down, the focus, as I understand it, I don't have personal knowledge of this, shifted to some of the things that KPMG had done. But at that point, we were down to the big four, and we could not afford to go down to the big three. And so KPMG got off the hook. If KPMG had been focused on first, then Arthur Andersen would have gotten off the hook. That doesn't happen in law. There are too many law firms, even though there's some very, very big ones. If you go after me, for example, for having done something wrong, my firm goes on, for the most part, happily, and they find someone to replace me. So the dynamics, I think, of the business models for the two are really quite different. I do think that the fact that accounting firms operate as firms makes, without the same kind of ethical structures that are imposed on lawyers, makes, I hate to say this because I'm a lawyer and I know there's some accountants here, makes abuse by accounting firms on a systemic basis more likely.
Thank you. Jason, and then Richard.
Thanks. I mean, the point I was going to bring up, I don't know whether this perhaps, it maybe doesn't quite meet John's definition of a single point of moral guidance for accountants, but we're just coming up to the 10th anniversary of ACCA's Governing Council adopting a global policy on taxation, which expressly addressed some of the issues we've been discussing today, and in particular the fact that whilst the law may allow you to do something, it may not be what you should do, and that has to be recognised in the advice that's given. It also recognised the position of businesses within society, and I wonder whether increasingly tax professionals are also starting to have to recognise that pursuing the most aggressive course isn't necessarily going to be the most sustainable, to use a very popular word, long-term option. And especially if, you know, the reputational fallout and damage is an issue. I think obviously Theodore's raised some interesting points about the durability of the individual firm, or durability of the firm versus the individuals. Equally, I suspect, I mean, the points Richard was making earlier about the Big Four and their position of dominance in certain areas of sort of the tax debate. But I suspect the image of them and some of the practices, even which, you know, seem to go on, would be quite alien and would seriously challenge the ethics of a lot of the individuals. I mean, as John said, probably it challenges the ethics of the individuals who are carrying this stuff out as well. But I wonder whether the majority of the employees elsewhere in the practice would be more aligned perhaps to the kind of ethical values that we're trying to promote here.
Thank you. Richard.
I wanted to challenge the idea that there is a Big Four firms of accountants, because there isn't. I put a link in the chat, which I know doesn't go to all participants, so maybe somebody can share it with other participants, to a paper that I wrote, which is now been submitted for academic publication, but that's the working paper version, which looked at the Big Four firms. We looked at KPMG in particular case study, and look, none of the Big Four firms is a firm. They aren't. I tried to get the European Parliament to actually pass legislation requiring that they prepare group accounts because they are single entities under common control. And actually the European Parliament wouldn't do that, and nor would they require that they did country by country reporting, which I thought would be a great idea, because they aren't single entities under common control. In fact, KPMG has at least 58 participant firms who are on its governing panel. And there are a total of 140 officers. It's not possible to be sure how many of those are under the control of different entities. But what is certain is that there is no such thing as KPMG. There are a lot of individual firms who call themselves KPMG who supposedly sign up to a code of conduct, which is apparently how they identify themselves as being members of the firm. But the regulation of that code of conduct is invisible. We don't know what is done. And the structure is deliberately created to mitigate against risk. Anderson was actually a unitary firm, by and large. It was the exception to the rule that these firms split themselves up to ring fence risk. All the others have done so and they've survived. And that's exactly what they will carry on doing. They know how to mitigate risk and ring fence themselves from it. And that's what they've done. So there is nothing ethical about their structure. They are not, and I stress, not Big Four firms. There are hundreds and hundreds of firms sharing names in common, but they aren't actually single entities.
Thank you. Robert.
Yeah, no, that is correct, Richard. When I was at the Big Four, of course, there are many firms, although Pricewaterhouse before the merger was a sort of a global firm, but they are, of course, managed like a corporation. If you're the CEO worldwide of one of the Big Four, and you can be a partner in one of the country firms, you're an employee as much as anybody else. So they should see them as corporations. International ones, the big ones have about $20 to $45 billion in turnover globally. It's not a small firm. Another problem they have is internal conflict of interest because they have auditors, they have tax advisors, and management consultants. In the past, as you know, the big four got rid of the management consultants. EY sold them, PwC sold it, etc. And then they built it again up because there is so much money involved. But I think it was last year, EY announced that they would split it off again. I don't know actually whether they did, which I wrote about in Tax Notes International because I think that was a great idea. You cannot have an auditor that's independent and then says, I'm auditing this firm that was advised by my tax advisor to set up this structure. It's not acceptable. That's not happening because you get paid for that tax advice. So I think they should, and otherwise the legislators should mandate that auditors are independent and cannot work together with tax lawyers and with management consultants.
Thank you. Recognizing the points that both you and Richard sort of made about the big four not being quite the big four, I did want to ask a question that kind of put in one bucket big law, big accounting, whether they're four or not exactly framed that way. And individual tax professionals or small or medium-sized firms, sort of how do you see the difference between those two buckets in terms of tax abuse in the gray area? Martiana?
Thank you, Diane. I think big law or accounting firms have resources to design complex tax structures which exploit differences in tax regimes in different jurisdictions more than individual tax professionals and small or medium offices. Personnel with background in banking, capital markets, fintech, other financial services, and other specific industries are usually more readily available at big consulting firms than small or medium offices, let alone individual tax professionals. Moreover, big tax consulting firms usually have more chances to work together with tax administration in reshaping tax system. So they have more access to the information about what kind of policies or strategies which will be adopted by tax administrations. It's quite similar to insider trading in stock exchange, I think. And last year in September, the OECD published a report on tax moral 2, building trust between tax administrations and large businesses. And the report is based on a survey of more than 1,200 tax officials from 138 countries. A majority of tax officials believe the big four accounting firms, I'm not trying to disregard Richard's opinion on this, I'm just trying to simply stating the survey results. They believe that the big four accounting firms try to exploit loopholes in laws to help clients at least some of the time. And tax officials also believe that the big four were more likely than local accounting firms to advise clients to use aggressive tax strategies, underlining a lack of trust between the firms and tax administrators. I actually would like to know the perspective of other colleagues on this result. Thank you.
All right, so we have John, Carlos, and then Paul.
Right. Well, Mariana, I want to take a contrary view on that because much of the discussion I've had over many, many years with tax professionals has led to a conclusion. It's not a hard conclusion, but nonetheless, it's a conclusion that much of the worst stuff, the dark gray area, doesn't happen within the factories of KPMG, their famous tax factories in the US and so on. It happens within the boutique operators, and the boutique operators are often kind of low, relatively small companies. We've got plenty of them here in London, who are prepared to take much greater risks with their clients, particularly around things like VAT fraud and personal income tax fraud and so on, than the big four accounting firms. I trained with Deloitte many moons ago, and they're by no means angels. But I don't think that Deloitte would have ever considered some of the schemes that we've investigated in recent years around, as I say, VAT fraud and personal income tax fraud. But there was, when I talked to senior professionals, there's this sense that there's a kind of race to the bottom, a degradation of practice going on, because clients can always turn to these boutique operators and say, well, if you don't do this, I can get this elsewhere. And that puts many people into the position or the situation that Richard was addressing, where you then have to, make a big decision between the huge fees you might earn or whether you want to go home and sleep at night. And I think that's that many people need protection from being forced into that, making that decision.
Carlos.
Very briefly, I just wanted to add up
Oh.
my experience, since I have worked in both sides of the equation. I would say that the main factor differentiating working for one of the big four firms, big firms, and boutique, so-called boutique or solo practice, is that when you're in solo practice, in boutique practice, you're more free to adapt your practice to your own ethical standards, and that's tantamount. In when working on a firm, you're subject to many pressures. Like I said a few moments ago, money talks. You need to build them up. You need to build the most. You need to have as many billable hours as possible, and you have to maximize revenue for your client. While when you're directing your own practice, you're more free. You're not constrained as constrained by those restraints as you might be on a firm, because you want to have a good night of sleep, as John just pointed out a few moments ago, and you can sacrifice, so to speak, having larger sums of revenue for yourself or larger sums of income for the providing and having the satisfaction of providing sound advice to your clients and having them having the reliability on your expertise to provide their fair share so they don't get into trouble with tax authorities, which is particularly important. And I think this is also important to say in not so democratic environments in which taxation might be used as a tool against individuals, as it regretfully happens in some countries, particularly developing countries I know about. So I think that's a point. Obviously, when it comes to ethics, it depends on the eyes of the beholder, and it depends on what the individual position on each and every practitioner is. Obviously there are boutique firms that are engaged in gray area practices, and it's obvious that most people that work for big four firms are against doing gray area practices. But in the end, I think practicing law from the outside, let's say, provides you with way much more freedom in order to conduct your business in a more ethical way.
Thank you. Paul and then Ted.
Thank you. I think I would probably be, I mean, based on, I've been going after fraud in the government and in private practice basically my entire career. And I would be inclined to echo what John said. I mean, there's, of course, unethical conduct in both large firms and in small firms. But what you tend to see in my experience is some of the more sophisticated schemes will be developed by the larger firms, and in the context of sort of corporate type of tax planning, and often what you'll see at the smaller firms is basically just more gratuitous type stuff. And of course, with offshore work, you will have banks sometimes complicit as well. But if we're talking about sort of the professionals, I think that when you have a big firm like KPMG or Ernst & Young or what have you, they have compliance programs. They actually are subject to training, and I think also in line, with what Theodore was saying earlier, there's a sensitivity to what your actions may, result in for the firm more generally. And so there's this move toward conservatism, perhaps. It's obviously not, always the case, and there are abuses, but they tend to be at a more sophisticated level and less gratuitous, I think, because of that conservatism, in my experience.
Ed.
Yeah, so I just wanted to note one other, this is almost a business structural phenomenon that's been going on, in my perception, at least over the last 50 years. The Big Four have enormous economies of scale, and that's not true of law firms. We don't talk about a big four of law firms. Indeed, my firm was a huge firm, but it was about 100th. So it would be part of the top 100 firm as opposed to the top even dozen. And so, for example, I had a problem involving the licensing of a patent from a Swiss Stiftung into Canada. And the question was, do we run it through the Netherlands Antilles, the United States? And to do that analysis, we needed 3 different law firms. A firm focusing on Netherlands Antilles tax, a firm focusing on Canadian tax, and myself focusing on US tax. And we had learning curves. So, my Canadian colleague said, well, maybe we should do a butterfly. I went, what's a butterfly? So my sense is that if that conversation had occurred within one of the Big Four, it would have been among colleagues who had talked with each other before, had a common vocabulary, and could resolve issues, I think, more easily. Now, in consequence of that, it's also my sense, although I've never done a rigorous study of this, that the accounting firms are beating the law firms really very effectively in terms of attracting the tax planning business. So my sense is that the tax departments of the big law firms really have not grown significantly. Indeed, in many cases, they've shrunk over the last 50 years, whereas all of the rest of the law firms have gotten, the other parts of the law firms have gotten bigger, whereas the accounting firms have just gotten bigger and bigger and bigger. And we know, my school operates a tax LLM program, which attempts to train students in sort of high-end business tax planning. And almost all of our graduates go to the accounting firms, not to the law firms. So a lot of the business is moving into the accounting firms, and I think that reflects the fact that more resources matter in tax.
Thank you. Richard.
I'll try and be quick because I know I've made quite a lot of contributions. The Big Four aren't just enjoying economies of scale. In economic terms, they are rent extractors. They have created very strong intellectual property values around things, for example, like transfer pricing databases, from which they can extract enormous value. Because they alone can compare the price of a particular log in the DRC with the market for timber as a whole, for example, looking at a case that I happen to have looked at once. Nobody but one of the Big Four firms seemed to have that information. So they could charge what they liked, and they do charge what they like. And it is also why they are so heavily invested in maintaining some systems that are so obviously incoherent. Why do they argue so strongly for the retention of arm's length transfer pricing, which is a complete fantasy system of taxation, making assumptions about the relationship between entities that simply do not exist in the real world, because they are the only people who know how to operate it to the best advantage, and therefore the way to abuse it to best advantage. No wonder they argue so strongly against country-by-country reporting when I created it. They saw it as a threat to their well-being. And they will argue against anything that actually undermines this opportunity that they have, not to profit, but to extract rent from the tax system, to super profit. They're partners. That is the difference between them. And if you look at BDO and others, why are they so different in scale and profitability? Because of that fundamental difference of power over the marketplace.
Thank you. Philip.
Yes, and pillar 2 is the apotheosis of this. It has reached a new level. It's beyond transfer pricing. Transfer pricing is a walk in the park compared to pillar 2.
Thinking about these big firms that are employing tax professionals, should they be implementing internal ethics codes that are tailored to their specific, lines of operation, their specific business activities? Is that something that makes sense, or are there some major drawbacks to going in that direction? Richard, you're new, right? That's an answer to your hands up for this question, right? Go for it.
Well, they could start by saying don't let their employees cheat in their qualification exams. That would be a starting point for the ethics. But they're all being found guilty of that at the moment. So, God, heaven help us when we actually get to professional practice. They actually get their qualifications by cheating. I mean, they really have a long way to go. Sorry, I just had to put that one in.
What can I say? Yes. Anyone else have any thoughts on sort of, does something a little bit more specific in terms of codes of conduct make sense for them in their operations? John, and then Martiana?
Yep. I mean, very, very quickly here in the UK, you have the Institute of Business Ethics, and I've discussed these matters with them in the past, and they would take the view that you can have a core around which you can tailor to the particular circumstance of your business. There's no such thing as a kind of one set of ethics fits everything, but most people have a moral compass on most issues, and maybe a bit of guidance from a business ethics guidance institute would help them to tailor it to wherever tailoring is required. That's but I think the danger here is if you leave it to boards, rogue boards might well kind of tailor it to such an extent that anything goes.
Thank you, Martiana.
Thanks. Well, I believe they should have internal code of conduct. I'm trying to be optimistic here because I read on the chat previously sent by Consta about ACCA. I think last year they conducted another survey all together with International Federation of Accountants, IFAC, and I think they said that people have the highest level of trust in professional tax accountants and professional tax lawyers. I mean, coming from that conclusion, I think therefore professional tax accountants and professional tax lawyers have a great opportunity to build confidence and trust in tax systems throughout the world by implementing internal ethical codes of conduct to enhance their integrity. However, let's not forget that codes of conduct are only practical if observed and monitored. So they also need some people in their organization to ensure compliance with the ethical code of conduct.
Right. We've touched upon this, but I thought I would just kind of bring us back to it because of the observations about large accounting firms growing and perhaps the tax firms in certain functions, at least not growing in the same way. That leads me to sort of come back to this question, sort of conflicts of interest in the practice of tax professionals, particularly where they're combining auditing services, tax consultation, right, internal audit, client representation. Obviously, we've already indicated some of the big flags of conflicts of interest and problems there. What are the best practices to mitigate or avoid these conflicts? I mean, obviously, one would be to carve off the segments of business. So that's, I think, and as we mentioned, EY had thought about parts of that, not going there right now. Other things that you might, sort of encourage us to be looking at in trying to manage that kind of conflict, particularly in the accounting firms as they grow and take on more of these functions over time? Ted.
So I think it might be useful, given the changing nature of who is providing the tax planning services, for the accounting profession to think about imposing on itself ethical standards with regard to the providing of tax advice. So I've looked at a number of the relevant codes, the Code of Ethics for Professional Accountants. Basically, all they care about is will the tax advice lead to a possible self-review threat, and thereby threaten the integrity of the financial reports. They're not worried about whether somehow or other the tax code will be undermined by the advice. That appears nowhere in there. When I go to the Board of Accountancy regulations here in California for accountancy, the problem of tax advice is doesn't appear anywhere in those regulations. And I think, to me, that's a fairly major gap if what we care about is having tax professionals behave ethically. If the bulk of tax professionals are now within accounting firms, and there are no ethics rules with regard to tax advice, or they're minimal, or they're pointed in a different direction, then we're not going to have, well, we shouldn't really reasonably expect accountants to be having this issue front of mind, or we really shouldn't be expecting their best behavior.
All right, well, with that slightly negative, thinking of what we're talking about right now as being a look at the drivers of professional behavior in the gray area, I want to move away from the market structure and now turn to another set of questions under the sort of category of dominant narrative in taxation. So it's a kind of different way of thinking about some of the drivers here. And the first question I wanted to ask you all is, do you think it's possible to identify a prevailing set of beliefs or widely accepted perspectives, values, norms, assumptions that are shaping the understanding and practice of taxation at the global level? And if you think you can sort of identify something like that, what do you see as its characteristics? Richard?
I think we can blame Milton Friedman pretty clearly for this. He said the business of business is to make profit and you don't take anything else into account. And that's the ethic that has been adopted by the Big Four. It wasn't when I began, let me be clear. I can always remember actually working for St. Pete's. Yeah, literally some of the original Pete Marwick crowd. They appeared to be pretty ethical. I was pretty happy with working for them. Would I be happy to work with some of their successors? No. Why not? Because they simply believe that the business of business is to make money without asking questions, and they don't have any ESG or any ethical component to their thinking. And that's the dominant prevailing thought. It comes from business schools. It is about profit maximization and nothing else. And that's where we fail. Until we can actually overcome that, then the profession simply reinforces the failure of late neoliberal capitalism, which we're seeing all around us, because that's what's going on. Society's failing on that basis.
John.
Well, Richard just said it. Wow, he mentioned the failure of neoliberal capitalism. And now we get straight into the heart of international political economy of tax, because, looking back over the last 40 years, there's been a steadily rising stream of invective against tax. All tax is bad. States are bad things. And we're now at a position where democracy itself is failing because states are no longer able to deliver, even on the core matters like security, let alone health and education for our kids, and this, that, and the other, because to use the Grover Norquist's famous saying, they have starved the beast. They cut the tax revenues so democracy can no longer deliver on the promise that people in the West grew up with in the 50s, 60s, 70s. So something very profound has happened. There's been a prolonged attack on tax as a way of undermining the state and undermining democratic choices. And it's interesting that Fabio, before he left, put a note up about that, because I think he's absolutely right. At root, many of the people involved in the tax avoidance industry are profoundly anti-democratic, and that came out through the interviews that I made in 2015. Some of the people actually saw themselves as kind of not eco warriors, but tax warriors fighting the state. Profound, really deep antagonism towards not just tax authorities, but all politicians and all political engagement, and I suspect democracy itself. And I think we do need to couch at least some of the discussion in those terms, because across Europe and in the United States, we now have the very ugly face of fascism rising. And I think that the tax advisors who've been activists in this area must accept some of the responsibility for that.
Thank you. Samar.
Okay, yes. So, I mean, we talked about Milton Friedman, and, you can talk about Friedrich Hayek and the whole Austrian school of economics and blame them for neoliberalism and blame them for, but at the same time, I would like to ask all those critics, where Milton Friedman talked about, the things that we mentioned, but he also talked about the government has to play its role to create, market conditions where it's a level playing field. Okay, and that actually goes back to all the way back to the classical economists, Adam Smith, right? He talked about against the monopolies. So now we talked about the big fours, and it's not just big four in accounting. You have big pharma, you have big business. How do we end up in a situation where we have basically four giants, monopolies, right? And if you talk about neoliberalism, I mean, neoliberalism flourished in the Anglo-Saxon world, or at least in Britain and the US under Bill Clinton, Tony Blair, Barack Obama, right? I mean, these are the people who were not actually the original subscribers of Milton Friedman's philosophies, right? So it's more complicated than just, talking about Milton Friedman and his philosophy, because people who didn't subscribe to Milton Friedman, they still ended up supporting, the collusion of big corporations and the government. So who is responsible? I think this is both sides of the spectrum: those who subscribe to Austrian school and probably those who didn't. And now if you talk about, like, I would be interested to know the political lobbying that the big four always play, the role they play. I mean, the United States, you have is protected. Lobbying is protected as sort of freedom of speech or something like that. Correct me if I'm wrong here. So you have collusion going on between big corporations, big four, big pharma, big business, and government. And going back to the idea of fascism, I mean, if you look at the whole idea of fascism, the definition of fascism is the corporatization of economy, of our socio-economic. Look at the Mussolini's manifesto of fascism. I mean, it's a small book. I mean, you can get it from Amazon for a couple of quid. When I read it, I was like, wow, fascinating. It's the corporatization of our economy, of our socioeconomic, our political system. How does it happen? You can't leave corporations aside and you can't leave politics aside. It's the, anyways, that's my 2 cents on that.
John, Paul, and Ted.
Yeah, I want to come back to Sam. Absolutely. But I would add another Chicago person to the list of people who we might track back to, and that is Robert Bork, the famous jurist, and his view on competition policy, which basically shaped a new world in which the antitrust, former focus on antitrust in the United States, which was a world leader in so many respects. When I was a kid, we kind of looked to US antitrust, and
John, you're muted.
Shit, I've just gone through sorry, I beg your pardon. Pardon for my language. I've just gone through a whole thing. Sorry about that. I hadn't realized that. Okay, I want to come back to some. I mean, absolutely, you're absolutely right. Milton Friedman can't claim to sole guilt for this, but I would add another famous Chicago school person, and that is the jurist Robert Bork, who really famously, kind of tipped U.S. antitrust onto the politics of U.S. antitrust onto its head, and argued that anything that led to lower prices to consumers goes, and the consumer was king in this, and market price was the only real indicator of consumer welfare. And of course, that fast forward 40 years has reshaped an entire world where chicken farmers are forced to grow chickens, breed chickens in the most disgusting ways, and all sorts of terrible things are happening in sweatshops across the global south as a result of this shift in competition policy. That is something that needs to be reversed. But and I totally take your point about corporatization and Mussolini's definition of fascism, because that's my starting point as well. But I think a huge part of the problem has arisen because of the power of these huge corporations to capture states, to capture legislators and judiciaries, to capture regulatory organizations, regulatory bodies, and indeed to capture professional associations to a very large extent. And here the fourth estate, I think, has failed us as well, because so much of the fourth estate actually lies in the very hands of the oligarchs and the billionaires who benefit from all of this. So we have a very fundamental political economic issue on our hands here.
Thank you, Paul.
Yeah, I just to follow on that, a friend of mine from law school, was a professor at Harvard, Larry Lessig. He ran for president in 2016 on the notion of eliminating problems with campaign finance, and then he was going to resign once he got that done. And it didn't come to fruition. Some of his ideas were adopted by Bernie Sanders, and those actually landed up having a little more traction than you might have expected with the size of the campaign contributions he was accepting. But that really is sort of the nut of the problem. Because when you have these large corporate organizations and they are given free rein to rain money down on congressmen and senators, they will behave accordingly out of their own self-interest, and that just leads to policy that is not rational at the end of the day. So we want tax policy or the administration to work, but government needs to be rational. And it's not rational because it's influenced unduly by the cadre of folks who have the most dollars to spend to influence policy. And Citizens United, a Supreme Court decision, just incidentally was sort of like just gave a green light on that for folks to continue doing that. And so it's a real challenge, and short of amending the Constitution, which is an incredibly difficult challenge in the United States, the prospects are not promising for solving the problem.
Thank you, Ted.
Sure, thank you. So I think the dominant narrative has been, in the United States at least, has been optimal tax theory. I can't speak for European theorists, but I think it also has affected taxation in the UK as well. And a lot of my scholarship has been focused on examining critically the various postulates of optimal tax theory. But there is a case in the Supreme Court right now that may change the narrative dramatically, and that is Moore versus the United States. So those of you who are not in the United States may want to keep an eye on it. It's a case that basically says that a prerequisite to the taxation of income is realization. Realization by the taxpayer, not by some affiliated taxpayer. Now, if this case is decided in taxpayers' favor, the United States international tax system in particular will be completely overhauled. There will be no longer any taxation of controlled foreign corporation income by parents. The GILTI rules go away. Lots of rules go away. Indeed, the whole partnership tax system potentially goes away. And what will end up happening is that we're going to end up with a bunch of constitutionally protected tax loopholes, which favor primarily those who can afford to drive through the loopholes. So at that point, I think optimal tax theory will become, at least in the United States, will become a worry that would be lovely to have, but even if you don't believe in it, but we'll be focused entirely on how on earth do we structure a tax system within the constraints that the conservatives who currently run the Supreme Court have imposed on us, because I think they are sympathetic as well to the notion that we should make the federal government small enough that we can drown in the bathtub. And I think if they manage to get their way, we may end up with an income tax system in the United States that does indeed make the federal government small enough to drown.
I wanted to kind of move from the various framings and ideas you've sort of been able to articulate about a dominant narrative or different dimensions of a dominant narrative, and ask, how does it influence professional activities of tax advisors? Kind of go from that sort of, conversation space, narrative frame to the lives and the workings of the tax advisors we've been talking about, and sort of how would you describe that connection, where it bumps up, where it does the most damage or work? So what you'd offer on that? John.
Yeah, very quickly. I think in many cases there's not necessarily a deep understanding of these framings or narratives, but it sure as hell provides a very convenient fig leaf to hide behind. And I think that largely captures it in most cases.
Anybody else on that? All right. Well, you can percolate and see if you want to come back to it. Are there alternative narratives, right, that are emerging to sort of counter the sort of dominant conversation that we've been having here? Do you see that? Do you have sort of places you would see it could possibly be emerging, even if it's not quite there yet? What would it take for that to happen? Yeah.
I don't want to dominate this at all, by any means, but I think now with the civil society hat on, when we founded Tax Justice Network, it's a global civil society network, we had very much in mind the need to push back against that framing that tax is bad and that tax avoidance is useful. And I think that that's percolated within the public, certainly in Europe, and I suspect to a certain extent in the United States and Northern America, but also elsewhere. There's a very significant antagonism to tax avoidance has built up. It's not just seen as a corporate responsibility issue. I think it runs deeper than that. And I think perhaps one of my proudest moments in the last 10 years was when the partners at PricewaterhouseCoopers told me that when they were going around the universities trying to attract the top students into the accounting profession, the accountants, the students were saying, no, we don't like your positioning on tax. We don't want to go there. And I think that was at least part of what we wanted to achieve in order to put pressure on the professions to tidy up. And I hope eventually they will recognize that if they really do want to attract the best into their firms, they do need to tighten up their ethical standards.
Jason.
Thank you. Yeah, I mean, I think, as John says, there has been a significant shift in approach to tax avoidance. I remember speaking to a former head of tax at one of the major extractives who said, yeah, I mean, this was probably 10 years ago now, I was speaking to him, and he said 10 years ago, we didn't worry if we were on the front page for tax avoidance because we just thought, well, it'll be someone else next week and nobody really cares. But by 2013-14, it was starting to make an impact and was starting to have consequences for their decision making. I mean, in terms of the framing around tax, certainly I'm always very conscious when we're discussing it not to talk about a tax burden. We try to talk about a tax contribution or even just be neutral, talk about taxes paid. And this comes out in the research work we do on public trust in tax, and asking questions like, who do you think is paying a reasonable amount of tax? And interestingly, more people think that multinationals are paying a reasonable amount of tax than think that low-income individuals are paying a reasonable amount of tax. The concern, of course, is that low-income individuals are paying too much and multinationals are paying too little. But that doesn't always necessarily fit the narrative that you would see in the press coverage. In terms of trying to move to different stories and different things that accountants and professional bodies can do, one of my colleagues did some work a few years ago with a think tank called X-Tax, looking at trying to use the tax system to move towards a circular economy. One of the difficulties with that is that if you are going to shift to taxation of pollution and resource use and consumption, you need to stop taxing something else. The move, and I think I thoroughly agree with this, is actually to reduce taxes on labour rather than corporation taxes. I think corporation taxes have a role to play and they should stay there. The difficulty at the time, of course, was measuring things. Tax is measured in money. It's part of the definition. And you therefore need to be able to value these sort of physical, sustainable, or things which are related to sustainable development. You need to be able to value them accurately in order to tax them successfully. And that's a challenge to accountants because historically, as we've covered, companies sort of live and die on the accounting numbers based on the accounting standards. Hopefully there's a shift now more towards what I describe as sustainable value generation rather than just simply profits. And accounting for that is a major, major challenge. And it's keeping many of my colleagues very busy trying to work out what are the standards, which experts do we use. You know, it's not just about the accountants. You have to bring in the environmental scientists. You have to bring in the people who can assess this stuff. And how do you apply it globally? Because it can't work on a jurisdiction by jurisdiction basis. It's got to be subject to international agreement. It's hugely challenging, and it's challenging politically. You know, most governments probably only are around for they can't think in more than a 5 or 10 year horizon maximum. We released our report 6 years ago now, and we're still trying to build momentum. We're seeing people picking it up and saying, yeah, this looks like a good idea, but how do we actually move towards that change? And we'd welcome any support we can get on trying to do that. But equally, it's persuading the politicians and the decision makers that that's what they should be making the decisions on. It sounds as though John may be worried we haven't got enough time left to actually successfully do that. But we welcome any help and advice on trying to do it.
All right, Paul, and then Samar.
I would just note that it's, we were talking about conduct in the gray area, and, much of tax planning and tax returns, of course, happen in the dark. I mean, the information is just not available to the public. In the United States, Section 6103 governs the confidentiality of tax returns. It is the longest code section in the United States Code. With all the different protections, it I think got its sort of kick-started when Nixon was using folks' tax returns to persecute them back in the 70s, and then everybody has reacted to that by zealously guarding the information in tax returns as if it's a trademark or trade secret type information, but it doesn't have to be that way. Sweden, of course, has the tax returns in Sweden are public. At least for corporations in any event, and that is something where I think there maybe is some hope, because there does seem to be a greater interest in transparency. I'm in the whistleblower field, and the number of whistleblower programs is proliferating because folks are looking for a window to the information, and the reception we get in court when we're trying to gain access to information is improving. The government will still take extreme positions on the confidentiality of information. And when you reflect on it for a moment, why the hell is it confidential to begin with? It just gets accepted as if it's somehow critically important. And I think folks are taking a second look at that, which I do find promising.
Thank you. Samar.
I spent 5 years of my my life, of my PhD, trying to look at this whole area of alternative narratives or counter narratives or counter accounts, and not just how they develop but also platforms and challenges that people face who are trying. I mean, here we are developing a counter account to many dominant narratives, right, around taxation, politics, socioeconomic aspects. Now, it's not just the job of people coming from critical background or critical accounting scholars or professors, but also the role that media plays, or even Hollywood. I mean, look at the shows like Apprentice, right? We promote cutthroat capitalism, where and I think it's on BBC, it's paid by taxpayers, right? That if you can make it all the way through to this cutthroat attitude, then you are the best. Well, I don't know, Hollywood movies are made on how, glorifying these things. So culture, media, art, they all have a role to play. And for example, now I was also thinking about, another narrative that's emerging is the policy making of central banks. A lot of people are seeing inflation and interest rate hikes. Inflation is another form of taxation, right? They are saying, well, sorry, I just bought a bottle of water. I paid my income tax. I'm paying the GST or VAT on this bottle of water, but because of inflation, right, I'm seeing as another form of tax. So tax as a concept, it's very complicated. If you are now trying to make it look like it's a good thing, well, of course it's a good thing. You and I know it's a good thing, but ask those people who have to dig through their savings to deal, with their next mortgage payment. Okay, central banks, government policies, right? The narratives is like, is inflation another form of tax, right? And certainly for people coming from the Austrian or Chicago school, say, well, yeah, because central banks printed 2 trillion in the US alone. The impact is now in the whole world, in the developing world, right? Particularly. So there are loads of narratives. And then there's another narrative. I think somebody raised it earlier, that should we pay corrupt politicians and institutions, especially in the developing countries, taxes, or should it be voluntary? You know, so there are, you know, counter narratives regarding that, which, you know, it's so instead of looking at from a very Eurocentric, privileged Western position, I think we should be also looking at from those who are on the other side of the spectrum.
Great, thank you. What I'm going to do now is close out our discussion here of this part 2. We'll take a 5-minute break. When we come back, we're only going to do a short session. So we'll kind of wrap together thinking about the gray area and tensions and real clashes with democratic values, and then finish out what we've actually been talking throughout about, which is, you know, what's the space forward? Is it education? Is it professional training? Where do we see some avenues there? What would be some of the details? What would that look like? But together that will be a short session, and we'll pick up in just 5 minutes. So thank you all.